The market is doing extremely well today. Bitcoin is up more than 10% in the last 24 hours, while the altcoin market is doing even better than that. The question is this potentially the turnaround? We have seen all of that sell off. What's going on here? This is Bitcoin in US dollars, and we bottomed out at 62K. We went up all the way to 69K, an appreciation of more than 10%. Is this the turnaround? When we zoom out a little bit, this is Bitcoin with the best moving averages. We are still rather in a trading range. So even though today was impressive, even though today we have appreciated a lot, in the grand scheme of things, it doesn't really look like the momentum has already turned around. The moving averages is an approach to time the medium-term trend, right? Whenever we are above those moving averages, we should be betting on rising prices. When we are below, we should be betting on falling prices. And still, we are below both of those moving averages. The line in turquoise, that's the best moving average, the 125-day, if we just use the spot market. So if we just buy and sell Bitcoin, we don't bet on falling prices. If we don't want to be too active with our trading, reduce trading fees, the 125-day simple moving average is the best. If we trade more actively and we've got lower transaction fees because we might use perpetual futures and because we might use some leverage and because we might bet on falling prices every now and then the line in orange, the 44-day simple moving average, is the best. Still, even though that's the more active of the two moving averages, we are below that level now, which is currently at 78K. So even a very quick rally like this is not enough to turn around the general momentum, if of course history is any indication. What I find interesting about the current rally is that Ethereum, as a levered version, quote unquote, on Bitcoin, right, it tends to have more volatility than Bitcoin, outperformed, right? So the Ethereum dominance did go up as expected. However, the Ethereum dominance itself is also still within a trading range. This is the trading range that was established at the beginning of February, and we are rather trending down on that range. If we zoom out a bit further, then the situation looks even worse. This is now on the daily chart. The Ethereum dominance on a daily chart. Overall, the trend is down. This is the medium-term trend established at the beginning of February, and there's now two potential scenarios. Either we continue to bounce a bit further, we go up to the upper end of the range, and then we sell off, or we sell off instantly. Those are the two possible scenarios. There is a good chance that actually Ethereum dominance will rise a bit further, given that there is still space for Bitcoin itself to rise further, right? We could very easily appreciate by another 10%. We could reach the 76K mark and then sell off, and we'd still be in a healthy bear market. So really, it's just a matter of time horizon. How long do we want to hold a certain position? If we trade the minutes, if we trade the hours, then of course we should take advantage of a rally like this. But if we don't trade that actively because we want to reduce trading fees, because our market edge might not be justifying trading in and out of the market several times a day, if you just want to have a position and keep this for a bit longer, then still the bear market seems to be intact. This is just a counter rally. It's a counter rally versus a very massive quick sell-off that we've seen over the last months. So when day after day we see selling, that at some point people might get short exposed in aggregate, and that then maybe market makers start to liquidate those shorts, that's not necessarily a surprise. A rally like this is very much within expectation. There's nothing wrong with this. It's not necessarily that our general thesis, our general bear market thesis, is wrong. Now, let's pick something here, right? The top performers today is Polkadot. It's 35% up. And I've checked already AI. Is there anything really specific going on about Polkadot? I couldn't find anything. This is the dot chart in US dollars. And yes, this is impressive, right? 35% if you pick the bottom over here. If you pick the bottom on the 24th of February, we're even up 37%. So this is impressive. However, I always like to look at relative valuations, right? This is just the US dollar chart, and I always like to zoom out as well to get the macro picture. So when we look at Polkadot, in this example, versus the general altcoin market, and we don't look at the hourly time frame, we actually look at the daily time frame, the picture looks very, very different. This is DOT relative to the others market cap. So the others market cap is all the altcoins that are not in the top 10. And we just compare those two, right? Polkadot, very long term, tended to just underperform. It tended to get sold off. Check this, right? So we get these kind of rallies. We get here a 47% rally. We get here a 34% rally. And in Polkadot, since May of last year, maybe because of this long-term bearish trend, we tended to sell off a bit quicker, right? The selling was from the top of the trend channel to the bottom, and this is just a strong correction of that very quick sell-off. So even the best performing cryptocurrency today in the top 100, Polkadot, it's just a short-term bounce. The grand scheme of things, right? If you just look at the general trend, this still does not look healthy at all. And that's in general what I think is important here. When we've got a bearish trend overall, I think it's better to take that overall macro trend seriously. It's better just to continue betting on falling prices and take days like this as an opportunity to find new entry opportunities, to potentially add to new short positions. When we are in a bull market, right? When the market in general tends to trend up, then we try to find buy opportunities. We try to find days where people take profit, where things crash down, where we then buy the bottoms, we buy the dips, then bet on the general macro continue to go up. When we are in a bear market though, and I think it's very much likely that we are in a bear market, right? We've already dropped close to 50% from the all-time high. If we think that we are overall still in a bear market, then I think it's best to just take this macro picture again, and instead of buying the dips in the bull market, we short the tops. And so days like this, where everything is going up, where we reach some tops in certain cryptocurrencies, are the best days to enter, right? It's the best days to enter the short positions, to again take the macro perspective, take the macro trend seriously. And that's personally what I do, right? I'm looking for new short opportunities. Have a look at this, right? This is the Bitcoin treasury company balance plus the ETFs. So when we just look at the treasury company balance, we tend to continue to see accumulation, right? The Michael Saylors of this world continue to buy Bitcoin. Still, we saw Bitcoin dropping from 126K to our current levels. We also see how the Ethereum, or how the ETFs rather, don't necessarily sell, right? They simply keep their current balance. There is no net selling. There's maybe not that much buying in the last few months. But if you add both of those together, right, we look at the treasury companies plus the ETFs, so when we look at what's Wall Street in general doing, this is rather positive, right? So when we see Wall Street buying all the time, why is it even possible that Bitcoin can drop by 50%? Who is the marginal seller in this negative momentum over the last few weeks? It's obviously not Wall Street. The number of Bitcoin that's held by Wall Street tends to rather trend up. But somehow there is realized capital change that's negative. So in other words, people are realizing losses net. That's what this is showing. But who are those people? Because when we look at what the long-term holders are doing, so all the wallets that have held Bitcoin for at least half a year, they are actually accumulating since Bitcoin hit 87K roughly. They did sell quite a bit from 125K to 87K. But since we bottomed out at the end of last year, right, at the end of December of last year, the long-term holders tend to rather buy. So they are not necessarily realizing losses. So where is the selling pressure coming from? That's the big question. When we look at the value days destroyed metric, right? When we look at the dormant Bitcoin, basically, that's what value days destroyed is measuring. We look at the Bitcoin that haven't moved for several weeks, for several years potentially, and we look at the whales that have got a lot of Bitcoin, and we check at what has the dormant Bitcoin done. We see that there was very little activity in the last weeks, as in the dormant Bitcoin also did not get reactivated. That was not the reason why Bitcoin fell from 95K to close to 60K. So what triggered the sell-off, and why do we then suddenly see this turn around? And could we potentially see continued selling? If we don't know who's selling, right? If we don't know what's causing the further price decline since 87K, how can we then predict that we will continue to go down? I think I found an answer. I think I found the reason why we went further down. So this here is the short-term holder realized price. The short-term holders seem to not necessarily be selling, right? They are already in losses since we went below 113K. And short-term holders also don't necessarily like to realize losses, right? There tends to be more selling by the short-term holders when we are above the average cost basis. That's true for long-term holders, that's true for short-term holders. So it doesn't seem to be justified that it's short-term holder selling. It doesn't seem to be justified that it's long-term holder selling. Yet, during bear markets, we tended to fall below the long-term holder realized price. So what's going to push Bitcoin down to, say, 41K? At the bottom of a bear market, we tended to turn around below the long-term holder realized price. So that would be the most straightforward prediction here as well, right? We might be falling again. If we've already entered the bear market, we might be falling again below the long-term holder realized price. The average long-term holder needs to be in losses in order for the bear market momentum to turn around. That's a straightforward thesis here, right? When we look at charts like this seems to be the obvious case. But who is selling here? Check this out. we've got the hash rate by the miners. That, interestingly enough, it did go down since Bitcoin hit 92K roughly. So it seems to have been some selling by miners that capitulated. We see how the difficulty is going up all the time, right? The long-term trend is that it's getting harder and harder to mine Bitcoin. There's more and more competition. Hash rate is becoming cheaper and cheaper. And so this simply means that the mining business is getting tougher and tougher. And so when the Bitcoin price isn't appreciating as quickly as it used to, and the difficulty continues to go up, some people have to potentially turn off their mining. And that's then when enough miners turn off their mining operations, when the difficulty goes down. And that could be a potential reason why we continue to sell off. So some miners might have sold even when the long-term holders didn't sell, even when some long-term holders even bought. So miners are realizing some losses. That's one explanation. There's another explanation, and that's leverage. Have a look at the open interest. So this is now how much Bitcoin bets are currently made with leverage. When open interest tends to go down, there tends to also be less hedging activities by the market makers. There is positive correlation between open interest, so the amount of bets on the price, and the spot price itself. That's very visible with many small altcoins. It's also visible in the general macro. And what I find interesting is that open interest peaked at the 10th of October. And then afterwards came the flash crash, right? Many altcoins went down massively. But since that flash crash, right, since the 10th of October, the open interest for Bitcoin continues to fall even further. There is no bottom here. The open interest is now at very similar levels to where the Bitcoin price was at the same time, right? So if the open interest continues to have negative momentum, if there's less and less short-term speculation on Bitcoin, if it's not just the short-term spot holders, but also the short-term derivative traders that are currently exiting the market, then there is a good chance we continue to fall below the long-term holder realized price. So this is simply just a deflation of leverage. It's a combination of miners selling that could potentially push the price further down, plus a deleveraging through the perpetual futures. I don't think that the long-term holders will continue to sell here. I think that many short-term spot holders are already in losses. But really, the short-term holders that trade with perpetual futures, they might still exit. They might have a positive bias and they might get wrecked with every little sell-off. They are a potential source of selling, and so are the miners. And plus the general momentum, right? Plus us being below the moving averages. All of those data points point towards, at least over the next months, to continue to see further selling. When we look at the drawdown, right? The drawdown from the all-time high. In the past, during bear markets, we tended to fall somewhere between 85 and 75%. And we could make the argument that maybe the bear markets get a bit less severe over time, as the bull markets tend to make us less and less money, right? So there is decreased volatility on both ends. We tend to go up less, but maybe we also tend to crash a bit less from bear market to bear market. But when we look at the degree to how much we tend to crash less, indicated by this support line here, still, our expectation should be that Bitcoin could fall 72% or so from the all-time high. Maybe we turn around even a bit earlier, so it probably doesn't make sense to wait all the way to 72%. Maybe we should already start buying at, say, 65% or so, but we aren't at 65% yet. If we look at the all-time high and we measure 65% below that highest price, where does this bring us? The answer is to somewhere around $44,000. So it's interesting, right, how those numbers align. When we look at the long-term holder cost base, when we look at the drawdown from top to bottom, when we take, say, the 72 mark, right, 72% mark, what's most realistic based on prior bear markets, we could fall all the way to 35K. So those are the kind of ranges where I will start buying Bitcoin. At 65% below the all-time high, between 65 to 72% below the all-time high. Those are the kinds of levels that I feel comfortable with. Yes, is there the quote-unquote risk when we currently bet on falling prices, that we've actually bottomed, that we could see another rally? There's always a scenario somewhere that we could argue with, right? We had once a turnaround from the all-time high. Here at the second half of 2021, we dropped by roughly 50% to then just generate a new all-time high. This is not the regular pattern. Usually when we hit an all-time high and we enter a bear market, we tend to fall much more. We had one instance where this was not true. And the explanation for that is that Bitcoin was bought a lot by the institutions during that rally. So Michael Saylor was advertising Bitcoin as an institutional asset, and more companies started buying Bitcoin. And when we actually look at the on-chain data during that rally, it did not go up. Prior, right? So when we just look at the bull market since COVID. We saw all kinds of on-chain metrics going up. So the number of active addresses went up, the number of transactions went up, all of that went up. There was more activity, there was more views on crypto content as well. That actually peaked in April of 2021. It did not peak October or November of 2021. This secondary rally was not created by the masses buying Bitcoin. The attention on crypto was already going down even during that price appreciation. This was all just institutions buying in. And then the institutional buying power slowed down, and then the real bear market came. So I do not regard the October peak in 2021 as the actual bull market peak. I think crypto already peaked in March and April of 2021. And so because of that, because I don't really regard this as a true rally anyways, and because even when we hit the all-time high, we didn't continue the rally much more, I don't really think that this is a very likely scenario to repeat itself. I think it's much more likely that, we continue to our regular pattern, that we will fall all the way down to potentially 72% below the all-time high. That's my base case, and there is also an explanation of who might be selling here, right? The miners that continue to accumulate and the leveraged traders that use perpetual futures. Then, of course, arbitrage bots will balance out the reduced leverage in the market with the spot market as well. The spot price will go down when less people are betting on crypto as a whole. Does it make sense to have a look at Terra Luna? When we look at Terra Luna's impact, right, on the general market. Terra Luna was a decentralized finance protocol, and it imploded, unfortunately. There was billions of dollars. Do Kwon founded it. He's now in prison. Billions of dollars that got evaporated. And that started the bear market. So that's when the stablecoin market cap relative to the US money supply started to go down. Before that, we just had an expansion, right? More and more money was flowing into the space. But with Terra Luna, suddenly we saw outflows out of the system. People were withdrawing their stablecoins for fiat currencies. So that's what this chart is showing, right? When this is going down, people are moving from the crypto ecosystem to traditional finance. When this is going up, then people are depositing their hard-earned fiat to, say, a centralized exchange. The centralized exchange then sends those stablecoins, or those fiat currency rather, sends it over to a stablecoin custodian. The stablecoin custodian then issues the tokens on the chain, right? So the stablecoin custodian, like Tether, owns the dollars in a bank account, buys maybe some government bonds with it, and at the same time issues the stablecoin on chain. So when the stablecoin market cap is going down, people are exiting the ecosystem. When the stablecoin market cap is going up, people are entering the crypto ecosystem. That's fundamentally what this chart shows, and of course it has quite a bit of correlation with the general crypto price development as well, right? When money flows into the market, that's good for crypto prices. Now, what's interesting with this chart is, first of all, it has very little volatility. The trends are quite clear. But secondly, since October of last year, we do not see any growth anymore in the stablecoin market cap. So since October of last year, we do not see any inflows into the market. No people are depositing their hard-earned fiat into crypto, at least net, right? There's the same amount of people depositing versus withdrawing. And that, of course, has an impact, right? When you look at Bitcoin at the same time. So let's plot this below as a comparison here. Bitcoin versus the US dollar. And let's make this also in orange and a bit more visible. And we check, when did the stablecoin market cap not expand anymore? Since this point in time. Since then, we tended to see lower prices, right? We tended to see Bitcoin going down. This is when, for the very first time, we saw not just a 25% or 25% or 30% correction. This is when the correction got way more serious. So if money was still flowing into the space, then those corrections wouldn't be as bad. But because the inflows has stopped, the bear market is able to properly develop. And I just like to look at metrics like this, right? When there's no money coming in, that's a problem. Now, when Terra Luna today goes up or doesn't go up, I'm not really interested in that, because the issue is that Terra Luna is by no means as important as it used to be. And there's still a bit of supply held by the market makers, by the centralized exchanges, and they might every now and then pump the Luna price. And that might make sense then to potentially use as a short opportunity. So when we look at Luna, relative to the others market cap, it's actually not doing much, but we can see every now and then, right? Because people are betting on falling prices, because Luna tends to underperform the general market. Every now and then we see a short squeeze, right? We see how the market makers push up the price, and then once the short speculators got liquidated, then they sell off their holdings. That's true for the regular Luna token. That's also true for Luna Classic. Here is Luna Classic, right? It tends to long-term go down, but every now and then we get these short squeezes, and those are the opportunities to then potentially enter short positions, right? When we go relative valuation short, we go short Luna and maybe long Bitcoin. Short squeezes tend to be a good opportunity for that. Of course, there's some risk in that always, because we might get secondary short squeezes, but we can just double down, or we can work with stop losses. But in general, the trend is your friend, right? If something long-term goes down, we rather want to bet on falling prices. If something long-term goes up, we want to buy the dips. The pump happening now is a short squeeze. Yes and no, right? So the short squeezes tend to happen with small altcoins. The smaller the altcoin, the smaller the market cap, the smaller the liquidity, the less trading volume there is, the easier it becomes for the market makers to manipulate the price up. If an asset tends to long-term go down and more retail investors are betting on falling prices and it becomes a popular trade, then it's dangerous, right? So we do not want to just follow the popular trades. We always want to make the trade that the masses are not doing. If many people are betting on falling prices, then we see short squeezes. Then we see market makers buying up the supply on the spot market and liquidating all of those shorts and pushing up the price. Now, when I see a comment like this, right, the pump happening now is a short squeeze. This can be true for some smaller altcoins that are pumping much more. Let's say Polkadot, right? Polkadot tended to go down very long term. And so that's maybe one of the reasons why it's rallying more than the average. But for, say, Bitcoin itself, we probably don't see that many short squeezes because it's impossible for a single market maker to manipulate Bitcoin. It's simply too big. And there's easier assets to manipulate and make some money with. So I believe when there is a rallies, say, in Bitcoin, in Ethereum, and in the general market, that this is simply just a counter rally when a lot of sales have been made, that some people are taking advantage and buy the bottom. But when we see 50, 60, 70, maybe hundreds of % of appreciation in just a few hours in an altcoin, that's then a short squeeze. We have to differentiate here, right? A short squeeze looks very different to a counter rally. Again, we've just looked at Luna, and those are classical short squeezes. We go up very, very quickly, and then we sell off over a longer period of time. That's then when the market makers, after they've liquidated everybody, tend to sell off. And we want to, of course, enter a short after a squeeze like this. That's always the best timing. We look at assets that tend to long-term go down. We want to bet on falling prices of those. And ideally, we wait for a short squeeze in order to enter those kinds of positions. That's true for Luna. That's true for Polkadot. It's true for many of those assets, right? So I've been talking about Polkadot. Here's Polkadot, the best performer, plus 35% in the last 24 hours. And it is very impressive. It did go up by 36% since the bottom here, right? Since the beginning of yesterday. But the long-term trend dot dominance is very clear. It's just going down all the time. We should be betting on falling prices. And this is just a squeeze, right? When a lot of people bet on falling prices, the counter rallies, or the short squeezes rather, they tend to be more severe. The Bitcoin Treasury Company balance continues to go up. The Bitcoin ETF balance stays stable. It's not Wall Street that's selling here during this bear market. It is the long-term holders that started the selling, and now it's a deleveraging through the perpetual futures, a capitulation event by the miners. That's fundamentally what I think is going on here. Should we have a quick look at ADA? Why not? Cardano has been around for a long time. It also has its own dominance chart. That's the long-term chart, right? ADA dominance. Tends to be at a lower end of a very long-term trading range. Can rally a lot during a bull market, but I don't see an altcoin season happening anytime soon. I've mentioned this in prior videos as well. Altcoin seasons tend to happen when Bitcoin has already rallied quite a bit from the bottom to the all-time high, and when Bitcoin tended to rally faster than most other asset classes rather. So fundamentally, how I think about altcoin season is the altcoins tend to be assets that are bought by the retail investor, especially by the retail investor that just entered the space. And so altcoin season tends to happen when new retail investors come. New retail investors tend to come when there's a lot of attention on crypto. And a lot of attention on crypto gets generated through quick price appreciations. If crypto as an asset class, and especially Bitcoin in the early days, tends to appreciate faster than other asset classes. So when crypto goes up quicker, say, than technology stocks, goes up quicker than, say, gold, goes up quicker than anything else. If crypto is the best performing asset class, that's then when traditional media talks about it. That's then when new retail investors come into the market. So what this means is we want to look for a very quick appreciation in the Bitcoin price. We want to see new all-time highs in the Bitcoin price. And once Bitcoin is appreciated faster than all the rest, that's then when new people come in and buy the altcoins. And that's then when we want to buy the risky things, when we might be bottoming out. But yeah, when we look at Cardano dominance, in this case, it is low, but it can easily go lower as well, right? We can look at Cardano dominance. We can also look at, say, the Cardano price relative to the others market cap. We'll get the same kinds of chart, right? We are rather low. This is optically a great buying opportunity, but just have a look at similar charts. Let's say Matic relative to the others market cap. So we could always make the argument, for example, with charts like this, right, that maybe we should be bottoming out somewhere here. And then we don't. People don't necessarily always buy any altcoin just because there is a potential support. AVAX relative to the others market cap. So here, this is maybe a better chart. So we've got a relatively clear support at this level here. Still, right, we didn't necessarily stop the selling. So just because something is low doesn't mean it can't continue to go down. So the current momentum tends to prevail if the selling pressure prevails because the token inflation continues to stay up and the technology isn't really used much. And so it's the same for Cardano. As long as there's no altcoin season, I don't really see a reason why we should necessarily buy Cardano. Even if it's optically very cheap, it can continue to just bleed. The market makers, the people that have Cardano long-term, they might just continue selling and they might get out of altcoins in general. And so then that's very often what happens, right? We've got all this correlation within crypto and all the altcoins tend to move in the same direction at the same time. There's very few winners in a market that tends to go down long-term, right? If you look at this, the top 100 in the last year, there's a few winners, but the vast majority tends to go down a lot, and they tend to go down more than Bitcoin. Actually, have a look at this. So let's look at the top 100. We look at the performance in the last year. We order by the performance in the last year, and then we check where Bitcoin is. Bitcoin is over here, so it's at minus 22%. If we look at the altcoins that have performed better than that, and if we look at the altcoins that have performed worse than that, there's much more altcoins that performed worse than Bitcoin in the last 365 days. So there tends to be concentrating returns. It tends to be the case that most altcoins tend to underperform Bitcoin and a few ones outperform. And it's very hard to pick the individual winners. And so if we are not in a broad altcoin season where all the altcoins go up, very often the altcoins aren't really worth it, even if they optically on the charts look very cheap. Just because something optically looks cheap doesn't mean that there's a good deal, that it makes sense to buy it. I want to talk about the cycles. So what we see over here, that's the Bitcoin price over the long term on a logarithmic scale, and the horizontal lines here, that's the halving event. And the idea, how many people trade crypto, is they think that Bitcoin moves in a 4-year cycle, right? We've got 3 years of bullishness and 1 year of bearishness, and this tends to trade somewhat with the general cycles. Now, have a look at what happened after the halving events in the past. We tended to shoot up quite a bit. When we look at this green area, right, so let's zoom in a little bit. When we look at the green area, that's how many days have already passed since the halving, right? So the last halving was in April of 2024. This is how many days have passed. And this is days after halving for the prior cycle. So we can see how did the cycle evolve from this point onwards in the last 4-year batches. And when we look at the last 4-year batches, we've already peaked, right? So this is a commonality. We've already peaked, and everything that happened post, we still saw continued selling pressure, right? So we still saw this in 2024, we still saw this in 2018, and we still saw this in 2022. So it seems like the 4-year cycle theory still tends to hold somewhat. And this seems to be quite irrational, right? It seems like the halving event, right? So the change in tokenomics of Bitcoin tend to become less important over time because the newly issued Bitcoin tends to go down with every halving, right? So it gets cut in half. We are now at roughly 0.8% inflation in Bitcoin. Every year we get 0.8% of additional supply hitting the market. That's what the miners are getting. And with the next halving, that will be 0.4% per annum. So it should be less and less important. The halving event should be less and less important over time, from 0.8 to 0.4% to then 0.2, etc. Still, many people think that the 4-year cycle theory will prevail simply because there was a pattern that got established. It's a pattern that's very, very visible, and it might become a self-fulfilling prophecy, right? If we have topped out at similar points in time after the halving in the past, then there will be more eyes at that point in time on Bitcoin to potentially top out again. And then we do top out indeed, it becomes a self-fulfilling prophecy. If enough people think the price is high, then we just sell off afterwards. If enough people think the price is low, people start buying and start selling less, then we do indeed bottom out. So if enough people believe in something, that's actually what's going to happen. And the 4-year cycle theory is incredibly popular, and simply because many people believe in it, there is at least some buying and selling pressure based on that thesis. And so we have topped out at very similar points in time relative to the halving event in the past. And we did continue to sell for quite a long time, for several months, compared to the current point where we are in the halving cycle. So that's another indication that at least the people that are trading based on this narrative, they might still wait for purchases. They might not be impressed when on a single day we go up like this. Right? We might have a few altcoins that are doing well, but in the grand scheme of things, the people that position larger amounts for longer periods of times, they might not be impressed. Overall, Bitcoin is just having a little bit of a counter rally in a still overall bearish trend. Here's another interesting chart. This is the thermo cap multiple. So this looks at how much the miners are currently making historically. So when we look at the historical mining reward relative to the current price, we see what is this relative development over time. There are lower highs, right? We tend to go down here over time, but we also tend to bottom at a certain level. If we just draw potential resistance and support, it's very hard to argue that the current drawdown from the all-time high has already finished. So this is another metric that tells us maybe we should be cautious in buying this potential bounce. Again, we could easily hit 80K in Bitcoin. I'm not arguing that. The resistances are at 88K and at 77K roughly, right? So those are the two that we might potentially rally towards. And then once we get closer to those, I think it's very wise to rather be cautious for further buying. If you're a very short-term trader, getting into the rally might make sense, but if you're positioning for several weeks, I think it's dangerous to buy into the current rally. The backtests simply do not suggest that this is the best time to buy. We see this kind of pattern in the thermo cap multiple, also in other metrics. For example here, the net unrealized profit and loss. So how much is the average Bitcoin investor currently in unrealized gains or in unrealized losses? And we tend to trade around that level. And that's, I think, very important. Crypto, I believe, tends to trade in a range against its psychological anchor point. Because fundamentally, right, we can't really value Bitcoin. We can't really say a Bitcoin is worth 1 million or just $10,000 because Bitcoin doesn't create any cash flows, right? In traditional finance, we can simply just estimate the future cash flows, discount them to the present, right? We calculate the present value of future cash flows. We figure out what are the future cash flows, we discount them to today, we get the current price. That's what we do with traditional finance. We do this with property, we do this with stocks. With Bitcoin or with gold, we can't really do that because we don't have any future cash flows. Thus, I believe that the price simply tends to trade around a psychological anchor point. If enough people are currently in profit, some people might consider taking that profit. If enough people are in unrealized losses, the selling pressure tends to rather ease because nobody likes to realize losses. So maybe you already own a house, right? If you have a house and that house suddenly goes down relative to the price that you purchased it at, are you very likely going to sell the house? The answer is no, right? If you bought it for $1 million and it's going down to 700K, if there's no urgency to sell, you would simply just wait out this dip, right? You believe that houses long-term appreciate. That's why you bought it in the first place. And so if you consider to ever sell a house, you would just do this at profit. So your net unrealized profit or net unrealized loss matters for buying the house. It's the same for Bitcoin. If you buy Bitcoin and you believe in Bitcoin long-term, if you believe that fiat currency devalues quicker, that the fiat supply expands faster compared to Bitcoin supply, you believe that Bitcoin in 10, 20 years will be higher than it is today, then if you're currently in losses, there's a very low likelihood that you're going to sell at the losses, that you're going to realize the losses. So if the market overall, if the market in general is currently in net unrealized losses, the selling pressure tends to ease. And so the buying pressure has an easier time to take over the price development. So it makes sense to buy Bitcoin when the market as a whole is in net unrealized losses. And it makes sense that this is hovering around the zero line. Sometimes unrealized gains get taken and unrealized losses simply get ignored. And the long-term dollar cost averages take over, the long-term buyers, they take over. That's when a bear market tends to bottom. And I like this chart a lot because we've got the fundamental explanation of what's going on. But I also like this chart a lot because as with the thermo cap multiple, we do have quite strong supports and resistances here, right? So the tops tend to align well, the bottoms tend to align well. It shows us that the bear markets tend to be less severe in terms of unrealized losses, but it also tells us how the bull markets tend to be less exciting over time. And again, we are not yet at an extreme value here. Again, this shows us that we should rather be careful to buy into current rallies. I do think there is a good chance that this bear market is not yet over. There's a lot of different models that tells us exactly that. There's the 200-week moving average, right? Also a very popular metric. It used to be very good to time bear market bottoms. We tended to bottom perfectly at that level. It wasn't as great in 2022. So since Bitcoin appreciates slower and slower over time, the 200-week moving average tends to overestimate the potential, and we tend to now fall below that. And that would be my base case as well. I do not think that we're going to exactly bounce at the 200-week moving average. We're likely going to fall below that again, as we did in 2023. So even at 58K, we're probably not yet cheap enough. And so 58K is the absolute minimum where I would start buying in, right? We need to be at least below the 200-week moving average. Check this out. This is the Bitcoin power law. So this is not just a logarithmic chart here on the right, it's also a logarithmic chart in terms of how much time has currently passed. So have a look at how the first year has way more distance than the last years over here. And when we look at that chart, right, Bitcoin tends to trade in a relatively predictable range. Where is the potential bottom? According to the power law, it's at 33K, roughly. So there are some models that tells us in the lower 50s it might make sense to buy. There's other models that are a bit more conservative. Here is the realized price. It's at 54K currently. So that's the average cost basis of the market. In a bear market, we tended to fall below that realized price by roughly 20 to 30%. So 54K might not be the bottom. It might be 40 something K, right? 45K or so, according to this metric. When we look at the long-term holder realized price, right? What's the average cost basis of the long-term holder? That's currently at 41K. And again, we tended to fall below that in a bear market. So still, right, when we look at all of these metrics, we might make an argument that it could make sense to start buying at 55K with the expectation that we could fall further. But then also when we've got that expectation, we should be able to buy more and more as we fall more and more. 55K is maybe just the first purchase, and then we buy more as we go to 50K, we buy more as we go to 45K, and potentially even more as we go to 40K. And if you go below 40K, then of course the market would be extremely depressed. If you go below 40K, then very likely traditional finance is also massively selling off. Then maybe AI stocks are going to sell off. Then things get really problematic. If the general market, if traditional finance is not selling off, then the 50 to 40K range is a good buying range. At least if history is any indication. Here is the balance price. That's currently at 40K. That tended to be a very good bear market bottom. And we are currently going down in the balance price. So if we continue on that merry way down and we don't suddenly crash to 40K, but we just bleed there slowly, we might bottom out at a even lower level, below 40K slightly. And here is the coin value days destroyed. That's currently at 47K. That also tended to be a good bottom. Now, not all of those models can be correct, right? When we bottomed out for some models at 50K and for other models at 40K, then one of the models has to break and we don't know which one. And so that's in general how I think about things, right? No model is perfect, but some of them are useful and they can give us a range. And there's different kinds of market participants that trade based on different rules. Some might look at the 200-week moving average, others might look at the 4-year cycle theory, others might look at the realized price, others might look at something like the CVDD. And the sum of all of this activity then makes the price discovery. And so because of that, because we can't be certain what kind of investor is currently betting based on what kind of model, we don't know for certain where we bottom out. But what we can say, given all of those different models, what we can quite certainly say is that most of those models do not predict that we are currently already bottoming out. And because of that, we should rather be careful, at least in the medium term. At least as long as we are below the best moving averages in Bitcoin. And that's how I fundamentally play this market. I simply just look at where is currently the trend. And if we are still below that, I tend to bet on falling prices. And I am not impressed by days like this. Yes, if you are betting on falling prices and a day like this happens, that's not pretty. But in general, the approach has been working phenomenally for us. Right? We have been betting on falling prices since the 113K mark. This is where we sold our spot holdings and we made money during this decline, right? We even bet on falling prices with perpetual futures. We sold our spot at 113K. We have not made our 40% losses with our spot holdings. At the same time, with our more risky holdings, with our perpetual futures, we made money during the decline. And so I am very happy of where I am right now. Even if today wasn't great for me, even today I quote unquote made losses, I am not looking at things in that short of a time frame, right? I want to compound my wealth over the long term, and that's in general what we all have to strive for, right? We have to grow our capital faster than monetary debasement, faster than the 6.8% per annum. That's really what it's all about, and we have to forget about the performance in the last 24 hours, in the last week, even in the last month. We have to simply zoom out, we have to take a step back, and if we are able to compound our wealth by say 20%, 25% per annum, and we can do this year after year after year, we can simply just work hard, we can save a lot of money, we can put the money into a trading strategy like that, and if you compound at that rate, then just after 5 to 10 years we can probably already retire, right? Depending of course on lifestyle inflation. But really we don't need that much of a return. As long as we outperform the general market, as long as we outperform the monetary debasement over time, we are okay, right? Of course, the more we compound, the better, but we really don't have to double our capital every year. If we try to double our capital every year, then it's just a matter of time until we go down 1 year by say 70 or 80%. And that's a problem if your net worth relative to your income is relatively high, right? You can't save your way out of a drop like this. If your net worth is just a few months worth of your salary, then of course you can go very much risk on. You can just save for a while. But if your net worth relative to your income is high, it's several years of your income, you have to be more diversified, you have to be a bit more cautious, and you don't want to have those 80% drops. And that's how I fundamentally think about these things. I look at risk mitigation. I want to not be involved in the market when we crash by 70 or 80%. I don't want to be caught up during times like this. And yeah, our trend follower has been able to sell quite early, right? Over here, right? How many people actually saw the bull market top at the time? Feel free to watch prior videos on this channel that were published in October of 2025 and compare the videos on this channel to other crypto channels and see what their sentiment at the time was. You will see quite a stark difference. As in, don't get too overhyped about a day like this. Be prepared that in the short term, we might rally all the way up to the 77K mark, potentially even close to 90K. There is the potential we could go up, but I'm not betting on that because the general macro is still bearish. And so I'm just looking for new entry opportunities for shorts during days like this. And if you continue to rally a bit further, I'm just looking for another short. And that's fundamentally how I want to be positioned. In a bull market, I buy the bottoms. In a bear market, I short the tops. So yeah, that's it for today. Thanks again for watching. Thanks again, of course, also for your like, right? It helps the channel grow. And see you next time. Cheers.